Alphabet stock earnings preview. Bank of America's bullish outlook and key insights. Brace yourself for Alphabet's earnings. Bank of America sets the stage. Alphabet, NESDQ, GOOGL, is about to step into the limelight as the first major tech company to report its Q2 earnings on July 23rd. Investors are eagerly awaiting updates on its AI initiatives, advertising performance, and any indications of broader tech spending trends. But here's where it gets interesting. Bank of America's Justin Post, a top-tier Wall Street analyst, has slightly raised his already optimistic estimates for Alphabet's search business. His revisions reflect stable spending growth throughout Q2, which improved as the quarter progressed, thanks to a more favorable macro environment and FX tailwinds. Post now expects Q2 revenue of $81 billion and EPS of $2.21, up from his previous estimates of $80 billion and $2.15. Both figures are still ahead of the Street's forecast of $79.5 billion and $2.15. He projects 11% year-over-year growth in search revenue, compared to the consensus of 9%. On the cloud side, his $13.2 billion forecast also tops the $13.1 billion consensus, supported by recent workspace pricing increases that could offer additional upside. But it's not all smooth sailing. Alphabet's hiring trends offer a mixed signal. Job listings rose 14% sequentially in Q2, suggesting renewed headcount expansion, a potential margin risk. Yet, the continuation of its voluntary buyout program suggests the company is still keeping an eye on cost discipline. Looking ahead to the earnings report, Post believes the upside potential could come from commentary around stronger ad spending trends since April, solid search results that reflect effective AI monetization, and possibly a better-than-expected showing from YouTube due to easier comps. On the cloud front, increased capacity and growing interest in workspace AI features could provide another lift. However, investors will be closely watching paid click growth, a key sentiment gauge for search that will be revealed in the 10-Q. While some industry checks suggest a slight slowdown in click volumes, Post emphasizes that monetization remains strong. Accounting for the leap year comp in Q1, the analyst is modeling 2% year-over-year paid click growth in Q2. Additionally, updates on AI mode integration, Gemini traction, CapEx trends, and the OpenAI partnership are likely to be focal points. We remain constructive on Google's ability to drive AI usage despite cautious sentiment, Post noted, highlighting Gemini enhancements, AI mode rollout, and workspace pricing actions as standout developments year-to-date. Even with a solid Q2 print in sight, Post cautions that the DOJ's search antitrust trial, expected to reach a verdict in early August, could be the real market-moving event. That overhang may dampen post-earnings enthusiasm, at least in the short term, until legal clarity emerges. That said, Post continues to view the stock setup as appealing, reiterating a buy rating and nudging his price target from $200 to $210, implying potential upside of 10.5% from current levels. 29 other analysts join Post in the Google bull camp, and an additional 9 holds can't detract from a strong by consensus rating. Meanwhile, the $206.51 average price target implies shares will appreciate by 8% over the next year. But here's the part most people miss. While Alphabet's earnings are important, the DOJ's antitrust trial could have a much bigger impact on the stock's performance. So what do you think? Will Alphabet's earnings impress investors? Or will the DOJ's antitrust trial overshadow its performance? Let us know in the comments below.